Suresh Krishna. He's Chairman and Managing Director of Sundram Fasteners. Joins us on the line from Chennai, first on the show. Good having you, Mr. Krishnan. Thanks so much for joining in. It's an extremely strong operational performance by your company. I'm guessing lower commodity costs and cost controls have to do something with it. But is this 19% EBITDA margin performance sustainable for the quarters ahead?
Well, the automotive industry is doing well. The truck industry is revived quite a bit, and so is the car industry. The two-wheeler industry is also doing well. The main reason for the higher profits and EBITDA levels are due to a better product mix and also higher value-added items which have been exported in the last quarter, and I think it will sustain. My personal feeling is the performance of the automotive industry is not going to slacken now. And as far as exports are concerned, even though the American truck industry is down a little bit, we have actually very barely scratched the surface. Our exports are only around 1,000 crores, and I think there is a lot of headroom for us to go up. So I think, yes, there is sustainability in the figures.
How much of your margin expansion was a function of operating leverage, and how much of your margin expansion was a function of the commodity base?
The margin expansion was, had three components. One is the raw material price, which was favorable. The second is that working capital has been contained. The production efficiency has improved considerably because of volume increase. And the product mix has been very favorable. The higher margin products have dominated the product sales in the last 3 months. And I think all of this put together makes a very good mix for higher profits.
Mr. Krishna, you spoke about how there's much headroom as far as scale up on exports go. So what's your target there? How much are you looking for FY17? How much for FY18?
I don't know. It's very difficult to say, but I think we are aiming towards 1,000 crores. Okay. It has been slightly less than 1,000 crores, around 900 crores in the last years. We are aiming to breach that barrier, hopefully, this year. And there's been quite a lot of interest in specialized and highly technical forged products from abroad. And we are trying to capitalize on that. But you know how it is with exports. The lead time from the time you submit a sample to the time you get an order is almost 2 to 3 years. So it is a continuous process of expansion and realization. So I wouldn't say there will be it's not like domestic market where we are already a big player, and when the production goes up, it immediately reflects on your balance sheet. But export has been very good. I mean, on 30-35% on our sales, and especially when it's profitable, it adds quite a bit of power to the balance sheet.
Krishnan, I was just looking at a couple of brokerages who are bullish on your stock. They also say that debt repayment due to better working capital management is a key factor to watch out for your company. Can you tell us?
Debt has also been sustained because of better working capital. You are absolutely right. I mean, raw material inventory and all those things have been. We have had a special task force containing that, and even though the turnover has increased, the efficiency has increased, we also had a keen eye on the working capital management, and that has paid dividends in the last 2 years. As you see, the interest rates have been contained, even though the percentage is the same. But over a period of time, one can run away with the interest cost when one is expanding. But I think that has not been the case in the case of Sundram Fasteners. It's also good news for us.
So can you give me a number there, sir? I mean, what's the current debt? How much will it go down by end of year?
That is very difficult to say. It depends on the debt. Is a component of both receivables and inventory. And if the business really expands, then the receivables automatically goes up, and the stocking that is required also goes up. And if exports goes up, then the customers in the export market expect you to keep inventory either in India and most probably in the countries in which you do business. So there is a natural ascension of inventory when the business goes up, and you can't avoid that. That is a compulsion of the business expansion. But I would say that there is a good chance that the working capital will be well managed. It will not run away. I don't think I want to give a figure on that because it has come down quite a bit and compared to, say, 2 years ago, and we would like to keep it that way.
Very quickly, Mr. Krishna, you spoke about your receivables because working capital management is also one of the key triggers for the business right now. How are the receivables panning out and recoveries in terms of your overall debtor days?
You see, you find that when the industry is doing well, they will pay on time. It is only when the industry is getting into a recession or the sales is sluggish, then the payment becomes a problem. So I think the receivables will be good this year. It will be according to the business terms that has been agreed to between the customer and the supplier. But as far as exports are concerned, there is absolutely no problem with receivables because it comes electronically on the terms agreed. So we don't have to follow up with anybody to get payment. So I think it's all in all, with the business expansion of the automotive industry, the receivables should be containable.
Sir, appreciate your time. Thank you for joining us.
Thank you. Thank you very much. Have a good day.
Thank you. Same to you.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.